So I've shared the handout there on your screen online. So online you do this. If you want the handout, you click on the handout on the screen. If you want board, you double click on the whiteboard. So financial ratios. Ratios can be classified into 5 categories as follows. So we have investors stock valuation ratios, we have liquidity ratios, we have leverage stock gearing ratios, we have profitability ratios, we have activity or efficiency or asset utilization ratios. So activity or efficiency, they're also known as the turnover ratios. So what will happen? The ratios, that handout, you get time to go through that handout, but I'm going to zero in on measure. There are some serious ratios which you need to know. Yes, ratios which you need to know before knowing others. I don't know if you're understanding what I'm saying. Ratios you need to know before knowing others. So I'm going to zero in majorly on the liquidity ratios, on the profitability ratios, and on the efficiency ratios. So as you go to exam, there are first 10. There are 10 ratios which I want you to have. So I'm going to do a summary. We are going to do a summary of those ratios. Then we do questions. So in case we get 1, 2, those 10 are the most examined. So in case we get 1, 2, we can refer to the formulas in the handout, because ratios is all about what? Formulas. But before that, you can write something small and say, you can say something small. Ratios are numerical figures. Ratios are numerical figures. Are numerical figures. Ratios are numerical figures which are used by an entity, are numerical figures which are used by an entity to evaluate its trend, and performance, and those of other entities to evaluate its trend. So you know the word trend, and what? And performance of an entity, from time to time. Full stop. Common financial ratios are, so I want to give you a summary. I want to give you a summary here. So before knowing all those other ratios, because ratios are many, you first of all know this one's there. So under profitability, right there, profitability ratios, I want you to know how to calculate gross profit margin, right? That formula, you will be taking the gross profit, you divide by what? Sales. You multiply by 100%. Then the higher the better. Just leave it like that first. Then we have net profit margin. The way the name says, you take net what? Profit over sales times 100%. That's 100%. The higher, no, wait fast. Another one, I want you to go 3. There is what we call return on capital done what? Employed. Return on capital employed, which is called ROSI or ROSE. You take operating profit, you divide by the net assets. Then you multiply by 100%. So of these three, you say the higher the what? Yeah. The higher the better. Give my coffee. All right, so that is it. Number 2. So before we go to number 2, you say, note, operating profit is equals to profit before interest and what? Tax. Profit before interest and tax, PBIT. Then net assets is equal to total assets. You take the total assets, you subtract for me the current liabilities. Like that. So this one here. PBIT stands for profit before interest and tax. All right, let's go to number 2. Liquidity. Liquidity ratios. So liquidity ratios, there is what we call current ratio. Current ratio, imagine these formulas, you have to know of it. That is the funny part of it. So you have to. So current ratio is current assets over current what? Current asset over current liabilities. Then B is known as quick ratio. So quick ratio is also known as acid test. Acid what? Test ratio. So acid test ratio, the same with this, you take current assets, you subtract inventory. You divide by current liabilities. The ideal, the recommended should be 2:1. Recommended for these two should be 2:1. Your current assets should be twice your what? Liabilities. That one means you can pay liabilities na ubaki na kitu. So, yes. So when you are comparing two entities or 2 years, then you find kuna ingine iko na 0.1:1 na hii iko na 2. Then the one where assets are more than the liabilities performed better than that other one. So next, I said this 10 ratios are many. There are so many there, but at least let's gather this 10 first, then we'll be safe. So number 3, turnover. We have turnover. efficiency ratios, turnover stock efficiency ratios. So here there is inventory turnover. Inventory turnover. So inventory turnover, you will be taking cost of sales. You divide by average inventory. Then inventory turnover period. You take the reciprocal of this, just turn this one upside down. So it is the average inventory. You divide by cost of sales. You multiply by 365 what? Days. Then trade receivable turnover is you take annual credit sales, you divide by average receivables. Then receivable collection period. Receivable collection period. You take average receivables. You divide by annual credit sales. You multiply by 365 days. Then trade payable turnover, annual credit purchases, divide by average payables. Then payable payment period is average payables divided by credit purchases times 365 days. Yes. So those formulas, ukisha master, then you can do any question there. Uangalia hizo vitu kama unaweza shika. Kuna ratios mingi, but first of all, I want you to master this. So, I study them in 2 minutes. We soma alafu funge kitabu alafu funge one that one have cash, that one very fast. Because in the exam they're not going to give us formulas. Kila mtu ameshika ile ameshika, sio? Wewe umeshika gani? Nika hapo chini. Average, right there. Average is equals to opening plus closing divided by 2. Average is equals to opening plus closing divided by 2. So ukiona manipota average, that is the meaning. Opening plus closing divided by 2. Then again you say where opening is not available, where opening is not available, where opening is not available, comma, closing is assumed to be the average. Rest of it, illustration. Get out your past paper. Some I'm not demeaning other ratios. Zilikuja sawa. But unaweza nimewapea, those are the hot case. So I mean, and tabia kwa hiyo past paper, you tell me where you have gotten a ratio question. The one you have said, page 14. So I've already been told that we check page 14. Page 14, question 1. So that is May 2021. So right there, May 2021. Which question is this? But that one is also very important. Eh? It is also important, but let's do this. Kuna ingine, si ndio? Tufanye hiyo ya juu alafu tukuje kwa hiyo ya pili. Tuende kwa hiyo ya 12 then tukuje hiyo ya 14. So hiyo ya 12 is which setting? August 2021. August 2021. Question 5. Page 12. Then we will come for it later. So check that question 5. Look at A, the roles of accounting officers. Those ones is in that handout. Look for it in that handout. The following are the financial statement extracts from the books of Karamu traders. So Abdi, Beryl, Esther, Grace, Sheila, Ilman, can you confirm for me? You are there for your swali. I want us to start on good grounds because I'm only doing this. Na hiyo ingine. Utakuwa na hiyo concept vizuri. Esther says she's there. Who else? I want at least 2 people online. Whether you have gotten that question. Someone else? Beryl. Beryl is also there. Sheila is also ready. So let's read. Grace is also there. So the following are the financial statement extracts from the books of Karamu traders. So statement of profit or loss, which your eyes can be capable of seeing. Then statement of financial what? Position. Additional information number 1, there were no purchases or disposal of non-current assets during the year, no problem. During the year 2020, Karamu traders reduced their selling price in order to stimulate sales. That one has no effect. If they reduce price to your sales, yet they do. Assume price levels were stable. Assume a 365. Yeah, that's how. But sometimes in the one, then putting in a young and a half. And a half. What can I go and a half? So sit on channel. Hiyo inaenda siku ni siku inaisha hapa. Hadi kuna siku nyingine inaisha saa 6 usiku mchana. Mwaka imeisha. Wewe umetuangalia hivi unaona anaangalia. Anyway, for the year 2019 and 2020, compute the following ratios. Hey, Jacob. Compute the following ratios. Jacob is Mr. So gross profit markup, okay. Gross profit margin, net profit margin, ROCE, current ratio, acid test ratio, accounts receivable collection period. Nigani ziyapea hapo? Markup. Markup is gross profit over cost of sales. Sindio? Wametupea? Somewhere sometimes I can remember. So imagine it's just a matter of formulas. That's why I'm not doing so many questions. Once you know the formula, you are sweet to go. So something else, you have to do it for 2 years. Ratios cannot be computed for 1 year because while computing for 1 year, you have to compute comparatively. It is either for two different entities or for the same entity for different reporting periods. So I just want to show you the arrangement. So be ready. Also look for your ruler. Let me get my ruler. So right for me here. So this is how you arrange it. This is how you arrange it. Usiandike tu hapo. Kuna some good arrangements. So you write this way. You write here ratio. Indicate their ratio. Indicate their formula. Indicate there. We have which years? Years. Which one is start? Here, I write here. Then 2019. So have it that way. Then do this. I have that say. No. Ni wewe. Shida ama nikupee hii rula. Kama unaomba rula. Kaa na hii. Because you have just started. Umesikia hii masomo ya CPA. How different is this different? With what? That is very nice. But it is too intensive. Huh? Those who are in campus. In campus, people struggle like this. So we start. The first ratio they want is which one? Gross profit, markup. So gross profit, markup. Gross profit markup. You give us the formula. Formula is the GP divided by cost of sales. You multiply by 100%. So you just go to your profit account, the one they have given us. They have already given us the profit account. Are you seeing the gross profit to be 100? Yes? Yes. And the sales, are you seeing sales? 400. 400. Oh, sorry. Oh, sorry. Remember what sales. So this is 300, sure. Times 100. So ladies first. Ladies will be computing for me for 2020. Gents will be computing for me the answers for 2019 so that we don't waste time. So this other one will be 80 divided by 240. What is the what is the cost of sales? Sure. So ladies, give me the first percentage. Gents, give me the other percentage. Sharp. Oh, very nice. Hii inakufa na hii. Na hii inakufa na hii. 33.3. So this is 33.3%. Even this one is easy. 50. Yes. 50%. By tax. Imagine ukishaelewa tu hiyo arrangement, hata nikiwawacha hapo, unapambana kujua formulas. The next one they want is which one? Gross profit margin. Gross profit margin. So gross profit margin is gross profit divided by what? Sales times 100. So gross profit will remain the same in both. That is 80. Please help me with what? Sales. Sales here was 400. Sales the other side was 40. Everyone knows their obligations. So gents, get for me 2019. Ladies, calculate for me 2020. 2020 comes to 2019. Quarter means we are expressing percentage.
Yeah, 25%. The first one.
The first one.
Yeah.
Oh. Are you a lady?
3%.
This one is 25. And the other one? 33%. 0.3. Okay. So close that one. Are you getting it to be interesting? Right? Yes. The next one is which one? The next one is net profit margin. Net profit margin. What is the formula? Net profit over sales. As the name says, you multiply by 100. Net profit remains the same? No. Net profit. Net profit is 70. Yeah? 70 and 60. Are you there? Yes, 70, 60. Then you divide by sales. So sales 400. So 400, 100. The other sales is 240, 100. So give me the first and the next. 25. Which one? 25%. How about 2020? 17. 25%. Next is which one? Next they want ROSE. So ROSE is profit before interest and what? Tax divided by net assets times 100%. All these are profitability ratios. So profit before interest and tax, the same, it will remain the same. Eh? Sure. Are you seeing interest or tax anyway? No. So the net profit remains the same. So take the net profit remaining the same, 70. How much? 60. Let it be there. Then divide by net assets is total assets minus current liabilities. So total assets, where are you? Are you seeing total assets 2020 was 132? Yes. So it is 132 minus, are you seeing current liabilities to be 50? Begin. Yeah. Are you seeing 50? The current liability is 2020. Yes? Yes. Yes. Are you using 50? Yes. times 100%. Times 100%. Then the other year total is 70. Minus, are you seeing this one to be 12? Yes, sure. This one to be 12. 100%. So what you do to avoid errors, hey, do this. Do the denominator first. You say this minus this. Then what you get, you say 70 minus the answer. Then what you get multiplied by 100. Yes. So work this one first. Then you say now 70 divided by the answer. The first, the US is 103%.
Yes.
Yes, could you say?
Yeah. 70 minus 20 is less than 6.
Huh? But it's possible.
Yes.
So 103.4%. The first one, 85.% The next ratio is which one? Current ratio. Current ratio. Current ratio is equal to current assets divided by? Yes. So current assets we have 108. And this one, current liability 50. This other one, current asset is 40. Then this other one is 12. Then don't multiply by 100. This is a ratio. So, for example, tell me what you get. If you take 40 divided by 12, what do you get? 3.3. So it will be this way. The answer will be 3.3 to 1. Because what it means, this one goes here once, it goes here 3.3 times. So it is 3.3 over what? Over 1. So, and this one? 2 point? So 2.2? 2.2 is okay. So this is 2.2 is to 1. Yes, you have to. It's a ratio. This is to this. You have to. Next, acid tests. So acid tests. Acid test ratio. The same with this, current assets, but you subtract what? Inventory. Then you divide by current liabilities. Quick. It is also known as quick ratio. You know, stock is not quick moving. Can you force people to come and buy your stock? We can come back and work one day. So current assets was 108, inventory was 36,000. So minus 36. Current liabilities remains the same at 50. This one is 40. What was the inventory in 2019? 14. You subtract 14, divide by 12. So what you get divided by 50, what you get divided by 12, then your answer will be just like this one. This is to this. 2.2. 2.2 is 2. Then the first one, 1.4 is to 1. So 1.4 is to 1. Accounts receivable collection. period. Do for me that one.
Yeah, I know this too. How are you doing? What are you? Unajua lisema bila CFP na kwa CV. So lazima ati ndio wanaweza attend on. Watu sawa, wanajikaza.
Wako sawa. Ndio kombe. Watapita.
Na si. Hizo picha mapicha.
Aya, sawa. So let me join you here. Nini tunaangalia? Receivable collection, collection period. Collection period itakuwa average receivables divided by annual credit what? Credit sales multiplied by how many days? 365 days. I hope umekanyaga hiyo formula. So mimi nitaifanya hapa manually, nimeweka hapo because of camera. So nafanya 2020 here, wewe post vizuri na hiyo nyingine kwa table. Haya, so 2020 no, let's start with the 2019 ndio 2020. 2019 inventory was 14. What did they give us the opening stock? No. When you have not been given opening you understand? Receivable was 24. Yeah. But there was no opening. When you have not been given the opening receivable, then that closing is the average. You don't divide the closing by 2. Are we together? So you take that 24, you divide by credit sales. How much was the credit sales? 240. You multiply by how many days? Days. I always call it 36.5 days. Round off. So let's take 36.5. Then you do this. This one means what? This abbreviation. What do I mean? What does this mean? In equivalent or approximately. This is the meaning of approximately. Approximately how many days? 37 days. Approximately 37 days. So here in the 2019, let's go to 2020. 2020, the closing receivables in 2019 becomes the opening. Eh? So you take that 24 for 2019, you add what? 72. Yeah, you add 72, you divide by 2, then what you get again, you divide by sales, which is 400. Then whatever entire you get, you multiply by 365. So be keen, take 240 plus 72, divide by 2. Then what you get, you say answer divide by 400. 400, whatever you get times 365. Roughly how many days? 88 days. Please check to confirm 88 days. 43.
43.8.
So roughly 44 days. Let me check to confirm. You can for the selected view. So that is 24 plus 72 divided by 2, 48. 48 divided by 400 times 365 days, 44 days. No. Yes, it is 44 days. Full stop. So something you could be told, something the examiner could tell you, online, I hope you're done with that space. Something the examiner could tell you based on the ratios computed above. Based on the ratios computed above, comment on the company's performance. So performance, like in this question, the performance should be on the liquidity and the profitability, liquidity and efficiency. Because on profitability, these ones are profitability from here to Rose up to here. These are profitability ratios. Then these two are which ones? Liquidity. Then this one alone is efficiency ratio. So if you were to comment, unaangalia to the movement. In terms of profitability, which year was better than the other? 2019 was better because the higher the better. So if you check 2019, 50, 33, 33, 25, 25, 17, 103, 85. So 2019 was better than 2020. So the company's profitability status declined in 2020 compared to 2019. That is the comment you give. The company's profitability position has done what? Declined. When we come to current ratio, in current ratio, so not current ratio per se, but liquidity. Liquidity means when I ask you how liquid you are, what am I talking about? Are you liquid? Sure. Yes. So the ideal position should be 2:1. 2:1 means your asset should be twice your liabilities, meaning you can pay liabilities and you remain with something. So if you check in both cases, in fact, here is very worse. This person is at a very dangerous position, but this one better. So they are all liquid, but now if you check this one is better. So the company was more liquid in 2019 compared to 2020. Or if you don't want to say the company was more liquid, you say the company was capable of paying their short-term obligations using the available resource assets in 2019 compared to 2020. Yes.
If it is less than 2, does it mean that it is insolvent?
Almost, like this one is almost. It will be insolvent where now this one has dropped to 0. It means your liabilities are more than your assets. Imagine kama wewe nguo zako zote umeuza mpaka ukalipa madeni, lakini deni zimebaki na nguo umebaki nazo. Deni imekuwa vingi. Yes. But when you check the efficiency, receivable collection period should be shorter. it should be shorter. How fast are you collecting your debts from customers? So inafaa ikuwe short. Kama unataka collect debts zako after 1 year. Customer akipiga nataka nikulipe nipe account number, we sina issue na pesa. Tulia tu. I'll tell you when I have problems. So 2019 was still better. They were collecting very fast in 2019 compared to 2020. Payables should be high. You should not be quick to pay. You prolong payment period, then you shorten the collection period so that you maintain what we call ideal working capital. So in case they say you comment. So I want to give you a few minutes. You do for me this question, then we do it together. May 2021. Just in the same page, now page 13. So right there, May 2021, question 1A. May 2021, question 1A. I want you to attempt for me that question in the next few minutes. Then we get to proceed. All right. So attempt that question faster.
Working capital difference, yeah. Inventory, receivables, Which is 1.1. So tunasema hii ni 2.1 au 2.6. What is the meaning of getting number from the working capital? But again here, I think that lakini itakuja kuchanga jiona wewe tumesema working capital is equal to current assets. Either ni wrong or we say working capital is equal to current assets. Now we find the card. Otherwise, working capital. Current assets. Actually, liquid assets in cash in hand. Now, how do you liquid assets? Liquid assets in this cash in hand. Hata nini receivable. Because we are collecting it. Cash. Liquid assets include cash in hand, cash at once, to receivable. Sasa liquid assets cash at once.
You are praying. I hope the Lord has shown you where the exam is going to come.
Directed us maybe through you.
I hope not only. Online. Exempted. Same issue. Online. You're the Judy. Amen.
Liquid assets. Liquid asset current assets. So hapa hivi iko sawa. Liquid assets. Itakuwa difference ya current assets plus current. Sasa tufanye mtapopanga hizo programu. Current ratio is equal to current assets over current liabilities, which is equal to 1 over x equals to 2.6, right? So 0.7 here. We got equal 423, 423, 42, 3077. So current assets itakuwa hiyo ile ndio. Then the next is liquid assets. Current assets minus
So which is 1.4 is equal to our current assets. No, wait. See, in a function in brackets. Do this will work out. So let's see later.
Again, hiyo utafanya unajui kileta huku itabaki minus. Hiyo huku itakuwa minus. So utaanza hivi.
That's equal 1.4 equals to 1 sides. Number 592. Yeah, that's 592.
So we do it. It's supposed to be 11.
So around 308.
So it's either
or positive or plus.
hii negative.
Kama
Kama hii
negative,
negative.
positive. So
Yeah. Battery. Kwa hivyo ukipata bila battery.
condition 50.
76, 92.
Now, equal. Sabdi. Mambo umeshapata hiyo maneno?
Nimepata tu ya kwanza ya pili.
Ya kwanza bado.
Tatu.
Umetoa wapi? Ngoja nikuulize. Unajua unapatiwa karatasi na unapatiwa karatasi. Mungu hajafanya kitu kingine. Ati? Haiwezi kuita kwa sababu unajua ratio. 2.6 kwa maana itakuwa ngapi? 2 hiyo 2. Hebu kwa hiyo kwa itakuwa 30
Or select vile tunaambiwa ni current.
So 13 shillings.
13 hizi kwa 13 shillings.
Si 13 shillings. Unajua inaweza kuwa
where which numbers you have to speak in money.
So in terms of figures.
Yes, big figures like 1 million.
Or million ratio.
Sasa hii ratio will be reduced.
Yeah, that's what I said.
Now where are the numbers?
Nimesimamisha tu.
Haijatoka hapo. Ukifuata hii formula, working capital is the same as current assets. Yes.
Current assets.
Unaweza nakumbuka pale kwa nini kufanya statement of cash. Usikuwa unachukua anything that is coming into the company minus anything that is going out of the company in terms of inventories and sales. So working capital is equal to current assets. Yes.
Working capital no current assets.
Haya basi now.
Yes. Sasa the other problem there.
Kwisha. So online nimekaa hapo ningoja mfanye nikalala nikaota mmaliza. Online they are saying they have finished that question. The answers for which one? Ama tuanze current asset peke yake. Online they are saying current asset ni ngapi? Nani amesema hiyo yenyewe iko correct?
No.
Online mtu amepeana answer, hebu nione. Nione strategy. Ama tufanye tu pamoja. Let's do it together. So what were they saying in that question? Okay, but it can be worked out, because they have given us working capital. You know, working capital is current assets minus current liabilities. Are you aware of that? Yes, that is the working capital. Other for cash flow. Hebu angalia cash flow. Cash flow tulikuwa tunafanya
Net current assets.
who said? Working capital is current assets minus current liabilities. So start from this formula here. Working capital is equals to, you can say current assets minus current liabilities. Then they have given us the working capital. Sure. Current capital we have been given to be how much? So current assets minus current liabilities is equals to 11. Then current assets over current liabilities, we have been given to be 2.6. Sure. So we can therefore say that current assets is equals to 2.6 current liabilities. Is that okay? If we cross multiply this way. Is that okay? Yes. So current assets is 2.6 current liabilities. So we cross multiply to kill this one. So substitute this one here. So instead of current assets, you say 2.6 current liabilities minus current liabilities equals to 11. Sure. 2.6 minus this one is 1.6. Current liabilities is equals to 11. Current liabilities equals to 11 divided by 1.6.
687.1.
So current liabilities is equals to 687. Is that what you got?
No.
Kulikuwa na hitilafu mahali. But you have seen. Yes, that is current liabilities. So bring it here. Bring it here. So coming back here, all we go where? Times 2.6. So current assets is 2.6 times this. So current assets is going to be 687,500 times 2.6. Giving you how much?
1787,500.
1787,500.
The money we have no money working capital is to current assets.
It should be the net. It should be net current asset, not current assets. Hey, I'm assuming current assets are net current assets. Net. It should be net. Net means net. Net means you have subtracted current liabilities. What's up? Can we start answering questions? The current asset already, Roman 1, current assets you already to part.
Yes.
Tick. Current liabilities, tick. They want liquid what? Liquid assets. You know the liquid assets are which ones? Liquid assets. Liquid assets is equals to current assets minus inventory. Those are the liquid assets. So current assets minus inventory are liquid. only stock is not liquid. You look at a quick ratio. We are subtracting what? Inventory. So liquid assets is current assets minus inventory. So how do we get inventory? Which ratio can we use? Quick ratio. You have been given quick ratio. So quick ratio, how do we normally calculate quick ratio? Current assets minus our current liabilities. So they have said it's 1.4. Sure. So 1.4 is equals to current assets we have already 1787, 500 minus I divided by current liabilities, which we got 680, which one? 500. So cross multiply this one. So cross multiply this times this. Cross multiply. Cross multiply this times 1.4. What do you get? That times 1.4. 962 is equals to 1787 500 minus I. Minus I. So can you get I from there? So I is equals to 1787 500. This one comes this side there. Minus 962 500. You get 825. So that's the value of inventory. That is the value of inventory. Then they want liquid assets. So liquid assets. So liquid is equals to current assets, which is 1787 500 minus inventory 825. 962. 962. Oh yeah. So, which imagine it was that easy. It is over. Yeah. If they say net current assets, it means it is current assets minus current what? Liabilities. Bas.
So in short, the working capital is the net.
Yes. Working capital is the net assets. Whoever the net assets now here is the current assets minus the current liabilities. Wakileta hiyo? Naponyoka nayo. Haya. Sawa. So now we are done with that question as well as this other one. Joyce, you have been away. I don't know what is the problem. We covered some very important questions. I've never seen you. So that is all. What I want you to check for me very critically, go to your handout. You kindly open that handout. Open that handout. Joyce, where have you been? We have covered some things when you were away. So in the handout, the last page, are you seeing the advantages of ratio analysis? The last page. Huh? The advantages and the disadvantages of ratio analysis. Are you seeing them? Yes. So I want you at your free time, then summarize at least 4, which you can master well in your book. So, in the handouts, the last page, there is the advantages and disadvantages of financial what? Ratios. So read them, then summarize. They can ask you something there. Then also something else, which we did not do yesterday, the advantages of control accounts. Advantages of control accounts. That one also go and recite for me. The ones I gave you yesterday, did you try to check? Did you get answers for some? Or you have not gotten time to? The ones I gave you on cash flow. But you'll check. Yes, don't go in exam without checking those questions I told you yesterday on cash flow. So now I've added you 2 assignments. Summarize for me the advantages and disadvantages of ratios, which are in that handout, the last page. Then benefits of preparing control accounts. Only those ones. Time was very short. Time was very short. Considering also it was your first time to do CPA. So you have also really tried. Kilisho na mwanzo lazima uwe na mwisho. So I tend to say that I need to leave you now to study on your own until Monday the other week. Exam is Monday the other week. So you also need time because it is not only FX. You have some other units like law and the rest. So I know people are waiting. You want to say something which is coming? No, I don't know anything which is coming in exam, but what I know, they will bring everything which I've taught. That one I'm sure. There is no topic which is going to come from outside, unless it's like a small theory question from nowhere, like cloud, cloud computing. In fact, somebody can tell you the explain the meaning of our advantage of cloud accounting. Anika, yeah, where would I put it? It is not anywhere in the syllabus, but it's something new in the accounting profession. A cloud accounting and data analytics. Data analytics. Cloud accounting and data analytics. Just Google and read about those 2 items, data analytics and cloud accounting. Then those ones are enough. The handout I gave you for public sector, you have realized there are so many questions coming out of there. So make sure you read it properly. Ratios, just analyze the ones which I've told you here. But if I were to direct you properly, there is high probability, 99.9% chances they will examine NGO, non-profit making entities. Very high chances they will examine that. Even this one is standing a very good chance, ratios. Because cash flow was there last semester, there is very high chances. They normally alternate the 2. So there is also a very good chance they will examine this one here. Then something else, if I were to say, how do you control waliuliza last semester? Uses of control, it was question 1. If I were to say, I'm also seeing a very good chance of them examining errors, the suspense account. Suspense account is also standing a very good chance. So when you read suspense, read it together with bank reconciliation. Suspense and bank reconciliation, do them together. I'm sure those two, one is not going to miss. Either they bring all of them in one question, but I'm sure one is not going to miss. Suspense and bank reconciliation. Hiyo NGO I know they will examine. Kuna mchezo naona walicheza hapo kwa, there's a question walicheza nayo last semester. Hiyo manufacturing. It was either manufacturing, partnership, so it was not very clear. So between manufacturing and partnership, wanaweza kushtua bado. So walete manufacturing plain without partnership or just partnership. So play your cards well between manufacturing and partnership as well. Those are enough. Mutapita. But then I'm just sure you will just have to pass. There is no speed, unless hauna speed. Usifanye maswali 3 alafu useme God will see what to do. God can only see what to do by making the moods of the marker to be well when you have done all the questions. But even if the marker has good moods and you have done 2 questions, pass mark is 50%. So you have to do all the questions. The speed must be very high. Then, so I wish you all the best. I'm looking forward. I know you will pass. So I'm looking forward to see you in the intermediate level. I don't teach anything in the foundation apart from FA. So we meet in the intermediate level. level 1, that is section 3. So you will find a fair advance there. Thank you. Then I should forward this recorded class again, because I think quite a number were not there. So I'll forward to you the next few.